Hello friends, my name is Rajesh. Welcome to Target Prelims 2021 module of Rathod's IAS. So friends, today we are going to discuss about a very interesting economic related topic, that is the Deposit Insurance and Credit Guarantee Corporation Amendment Bill 2021. So what is the context of this newly proposed amendment bill in regards of the deposit insurance and credit guarantee? So here, before getting deep insights regarding this bill and its provision, of course this is a bill, it's not an act, proposed bill, so the provisions are yet to come out to have a deep discussion over that. But this topic I have selected for the purpose of explaining you the future of deposits, the future of your deposits if your deposits were held in the bank when the bank get insolved, when the bank get insolved or bankrupt, when the bank itself gets bankrupt. Then so what would be the future, what would be the next step, what would be the consequences? So for those things you need to know about the stature of deposit insurances in our country. So will your deposits got insured, or will your deposits be safe, and who is going to protect your deposits? Will there any body is there, whether it is statutory, or who will be organizing such a body, and how much amount of your deposits will get insured, and how much amount of your deposits will get back to you in case your banks in which your account is there get insolved, when actually the banks get insolved. So all these questions will be explained to you in this topic, and this topic will be followed by the question which you can address, right? So going into the topic, recently the Union Cabinet has approved the Deposit Insurance and Credit Guarantee Corporation Amendment Bill 2021. Here the term is the deposit insurance and the credit should be guarantee, and this corporation is a body, okay? It's going to insure your deposits and it will guarantee your credits. So it is very important to know about the insights of that body which insures your deposits and which guarantee your credits, right? So firstly, what is deposit insurance? What is deposit insurance? See, this deposit insurance offers protection to your deposits, to your bank deposits, in case your bank becomes insolvent. Okay, of course we need this. What if your savings deposits gets, like, what about your savings deposits when the bank gets insolved? Then it should get insured, right? It should have some protection, right? So that protection will be offered under this deposit insurance. So when actually the banks get insolved, the bank becomes insolvent when its total liabilities, exceeds its total assets. Fine. When the total liabilities will exceed total assets, even when it become, even the bank is also a trading company, like, okay, it also earns for the profits, so it will invest in some fields, and it also lend its money for us for the expectation of profit only in the form of interest or installment. When it fails to meet such expectation, okay, then that would become liability. When the total liabilities as macro increases, like when the total liabilities increases or exceeds the total assets they have, then that situation will throw the bank into insolvency. Then obviously the RBI will conduct a survey report, and based on the report the central government will declare a particular bank as insolvent, and it will bring that bank under moratorium. Okay, fine. What about the account holders situation? What about the people who save their deposits in such banks? So then those deposits need some guarantee, right? So in such cases the government steps in to compensate depositors, usually up to a certain threshold amount. Here the recent amendments talks about this threshold amount also, and at the same time within how many days we are going to get back our deposits. Okay, so these two critical components have been mentioned under this proposed amendment bill, which we are going to discuss a few moments later. So in India, this compensation on behalf of government will be taken, means your deposits will be guaranteed by DICGC, that is Deposit Insurance and Credit Guarantee Corporation, guys. See, this DICGC is a government agency which is in charge of protecting the interest of depositors when a bank fails. Okay, so this is a brief introduction regarding DICGC, and my motto to do this topic is to explain you this Deposit Insurance and Credit Guarantee Corporation only, because about this organization you need to know which is actual responsible for the guaranteeing of your deposit amounts up to a threshold amount, right? So let us know about this DICGC. See, this DICGC is a wholly owned subsidiary organization of Reserve Bank of India. So most important, it provides deposit insurance that works as protection cover for bank deposit holders, provided only when such bank were unable to pay to its depositors, and that protection cover has a threshold limit. Initially it was 1 lakh. But due to the recent developments it was increased to 5 lakhs. So we'll be discussing later. So this agency, what about, say, sir, I have the deposits in kind of fixed deposit or current deposit rather than saving deposit. Will my deposit get insured? Obviously, this agency insures all kinds of deposits, friends. Okay, for bank, including the savings, current, recurring and fixed deposits up to a limit of 5 lakh rupees per account holder per bank. So what if I have 10 lakh rupees of my deposits, okay, for set fixed deposit in a single bank? Unfortunately, you should compromise, because in case an individual deposits amount exceeds 5 lakh rupees in a single bank, then only 5 lakh rupees including the principal and interest, everything including principal and interest, only 5 lakh rupees will be paid by DICGC to you. Okay, that is the concept. Only when the bank becomes bankrupt. This DICGC protects depositors' money kept in all what type of banks? Commercial and foreign banks in India. Okay, that means those commercial banks and foreign banks should be located in India, and all central, state and urban cooperative banks, regional rural banks and local banks, provided that all these banks initially they should get this certificate. From the DICGC. Means they should get the registration under the DICGC. As an account holder, you can also investigate the banks. You can also ask the banks whether do they come under this DICGC norms or not. When they comes under the DICGC norms, it's a sense of security for your deposits. Then in case that bank fails, in case that bank's bankrupt, then DICGC will provide you the protection cover up to 5 lakh rupees for your deposits. Okay, so whether, see, do we have this any statutory mandate for this DICGC? Yeah, we have 2 statutes which gives the statutory backup for this DICGC. This agency operations are performed under 2 statutes. One is the Deposit Insurance and Credit Guarantee Corporation Act 1961, first one, and the second one is the Deposit Insurance and Credit Guarantee Corporation General Regulation 1961. Interestingly, these 2 laws, these 2 statutes were framed by the RBI. So here the RBI acts as a regulating authority over the DICGC on behalf of the government in order to protect the interests of the account holders of a bank when the bank comes under moratorium. Fine, okay. So we got understood about the whole thing about DICGC. But here the concept is, how do the new amendment bill benefit the depositors? How do the new amendment bill benefit the depositors? See, here we need to take the case study of the PMC crisis, that is Punjab and Maharashtra Cooperative Bank crisis. Okay, what happened in a couple of years ago, this bank has made fraudulent account transaction in order to facilitate its customers. So it led to the crisis, and finally it led itself to the bankrupt, where there were demands around the country. Okay, particularly it was led by the National Federation of State Cooperative Banks. So with the demand of National Federation State Cooperative Banks led, all the depositors were got the promise of getting insured of their deposits up to 5 lakhs. So before that incident, it was only up to 1 lakh their deposits got insured. But this case of the failure of banks, that is PMC crisis, led to increase the deposit insurance coverage from 1 lakh to 5 lakh. But however, there was no timeline, fixed timeline, okay, for the depositors to avail this insurance. So this new amendment bill benefits the depositors in two ways. Firstly, it was the 5 lakh rupees got insured only in the case of PMC bank crisis, only the PMC bank account holders. But it was not applicable to all other bank account holders when their bank gets insolvent. Okay, this is a special case actually. But this new amendment bill proposes the standard or fixed amount that should be insured, that is 5 lakh rupees to any bank which comes under the moratorium, so that all the bank account holders, when their bank gets insolvent, they'll get the fixed amount of 5 lakh rupees. Okay, they'll get the insurance on their account, means deposits for the 5 lakh rupees. So that's the first one. So that what would happen, the new amendment will benefit the depositors of the bank which have been placed under moratorium. Okay, and under the proposed amendments, I already told you, the Deposit Insurance and Credit Guarantee Corporation provide for insurance cover of 5 lakh rupees per depositors for deposits. And the second most important thing was, this 5 lakh rupees has to be paid to the depositors by the bank within 90 days of time. So these two are the most important new additions regarding the newly proposed amendment bill, right? So here is the question for you: which of the following statements are correct? DICGC does not ensure the deposits of state and central government. Okay, this is the first statement. Second statement: foreign banks in India were barred from getting registered under DICGC. An annual premium will be automatically deducted by the bank from the account holder's savings if it is registered under DICGC. So these were the three statements. You need to examine the statements whether they are correct or wrong. So I'll help you out. Firstly, in our discussion, I have left a space for you to evolve with a concept called what type of banks can be, what type of bank account deposits will be insured under DICGC. Because I told you what type of accounts, what type of current account, what type of current account or fixed account or savings account, those accounts money will be insured. But I didn't say, I left a gap for you that what type of banks accounts will be left out of the purview of DICGC. So that was, you have to make your work, and I hope to just enumerate the types of banks which comes out of the purview of DICGC, so that their account, their amount, funds or deposits will not be insured by DICGC in the comment box. So please try to answer that one. Here, see, the DICGC does not insure the deposits of state and central governments. Yes, it will not insure these deposits of state government and central government funds. Okay, so the first statement is correct. Next, foreign banks in India were barred, were restricted from getting registered under DICGC. Wrong, because it is the concept in India. The commercial and foreign banks in India, okay, those accounts, deposits also will get insurance under DICGC, provided that those foreign banks operating in India should get registered under DICGC. So there is a concept of permission for the foreign banks in India to get registered under this DICGC, right? So here the foreign banks in India were restricted, were barred from getting registered under DICGC. It's a wrong statement. Next, there is an annual premium that will be automatically deducted by the bank from the account holder's savings if it is registered under DICGC. Here we are talking about the insurance of the deposits, right? So obviously the premium should be paid either by the account holders or either by the banks. Here in this case, the premium will be paid by the bank. Okay, that the premium amount will not be charged from the account holders. So here there is no premium amount, that is annual or monthly, whatever it may be, there is no premium amount will be charged from the account holders amount. Okay, so an annual premium will be automatically deducted by the bank if it is registered under DICGC from the account holder savings. This is the wrong one. Okay, the bank itself will pay the premium amount, right? So this is also a wrong statement. So the correct answer is C, option C, one only. Okay, so this is the concept for today, guys. So hope you understood and got a clarity on this DICGC. Stay tuned to Rathod's IAS for more updates. Thank you.